How did early Black banks build generational wealth? Imagine a time when Black families faced barriers that kept them from accessing the same financial opportunities as others. Early Black banks stepped in to change that. These banks started after the Civil War and during the late 1800s and early 1900s. They emerged because white-owned banks often refused loans or credit to Black entrepreneurs, homeowners, and families. Black banks provided these services, helping Black communities grow wealth over time. They offered loans for homes, businesses, and education, which allowed families to buy property and start enterprises. This was a way to build assets that could be passed down through generations. Black banks also encouraged saving within the community. Many Black Americans had limited options for safe places to keep their money. These banks kept deposits local, helping wealth stay within the community instead of being taken away by predatory lenders or white-owned banks. This kept money circulating among Black families, supporting local businesses and creating jobs. Black banks also played a role in economic development by providing employment and training opportunities, which helped strengthen the local economy. Establishing Black banks was a symbol of independence and pride. They showed that Black communities could manage their own financial institutions and succeed. Leaders like Maggie Lena Walker, the first African-American woman to own and run a bank, and Alonzo Herndon, who built a large insurance and barber business, set examples of Black financial leadership. The Freedmen's Savings Bank, created in 1865, was an early effort to help freed slaves save money and invest in their futures. Despite setbacks like mismanagement, these institutions laid the groundwork for future wealth-building efforts. Many Black banks used community-centered models, focusing on customer needs and mutual aid. They often operated cooperatively, helping families buy homes, start businesses, and pay for education. These efforts created a cycle of wealth that could be handed down to children and grandchildren. In practical terms, early Black banks helped families buy property, invest in their children's futures, and develop businesses that could grow over time. Their existence challenged the economic marginalization caused by segregation and discriminatory lending practices. These banks became vital parts of Black history, showing resilience and a strong desire for economic independence that still inspires today.